there is no inflation rate. There's no zero inflation rate. The natural state of the market is not zero. It's not 2%. It's not 5%. It is negative. It's the productivity rate of the world expanding. And so that today would probably be, now you cannot measure what I'm saying from the system you're measuring from. And the chart that you just described, I hate that chart because every single thing in that chart is also manipulated by the money supply, and everything in it is being measured. So you have to be outside of the system to see the real truth of how fast prices are falling. That's why Bitcoin is outside of the system. It's bounded by energy. It's outside of the system. So you can see the true rate of what I'm talking about.
The financial world as we know it is a stage, and the script has been rigged. The natural state of markets, driven by raw innovation and unfiltered productivity, has been smothered by decades of inflationary policy. What should have been a system that rewards efficiency and advancement has been warped into a game of monetary expansion with prices artificially propped up. But in 2025, a seismic shift is on the horizon, and latecomers to Bitcoin will be left speechless. Bitcoin, the first truly decentralized, deflationary asset, stands in direct opposition to the manipulated economic frameworks of today. While traditional systems condition us to accept rising prices as normal, they fail to reveal the truth. Technology is inherently deflationary. Jeff Booth's vision couldn't be clearer. In a recent interview, he exposed the lie that props up the global financial system. Booth argues that the natural order of the market, driven by the relentless march of technological productivity, is deflationary by design. Yet, inflationary monetary policies work against this, creating a perpetual cycle of devaluation and economic instability. Booth doesn't just critique the system, he points to Bitcoin as the way out, a revolutionary tool built to mirror the unadulterated deflationary power of free markets. Here's the truth: Bitcoin is no longer just a hedge or an investment. It's the embodiment of a revolution, a financial awakening. And this year, as the Bitcoin rally sends shockwaves across the globe, the message will be undeniable. You can't inflate productivity. You can't suppress innovation forever. And you can't stop Bitcoin. Let's watch clips from Jeff Booth's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Can you kind of break down what inflation really is?
Yeah, and so I would actually rather start from the other way.
Okay.
Because then you as a byproduct, you can see what inflation really is, because these terms are all a construct from the existing system.
Okay.
So if you start from a first principle, and you say, instead of technology being deflationary, if you just start with the natural state of the free market is deflation, and you know how you just nodded your head. And it's funny, everybody knows that to be true, even though they can't explain it very well.
Yeah.
And the nod of your head is actually, you feel that that's true. And why would that be true? The natural state of the free market is deflation. So let's dig into that deeper. Primarily because of this. Every single thing that an entrepreneur creates to create more value is competing against something that was there before and people were using. And if they don't create more value, they fail. And if they create more value, we use the thing that creates more value. And the output of that is some of the other's business is impaired and the new business grows. And the output of that is prices fall.
Okay.
Right. And that's been the process throughout time, as we essentially, and because what ends up happening in the free market is the scarce thing or the thing that drives more margin creates more opportunities for entrepreneurs to attack that scarce thing and provide more value. Mm-hmm. So it's a natural phenomenon. And we trade with people all over the world to gain more value. Mm-hmm. Then every component of every components in this component, mm-hmm. computers, components, and everything rely on that same principle to try to gain more value for ourselves. So we are part of the equation. We are a critical part of the equation that searches for more value. So you ask yourself, if the natural state of that process of us searching for more value is that prices fall, and then we create ideas like artificial intelligence or chips in computers that were made from grains of sand, right, in silicon, to be able to create new and better ways to solve scarcity, then as we create these tools for human abundance, then deflation should be faster and faster, because the productivity growth moves faster and faster, and it should flow to all of us, every single person in humanity. 8 billion people in service of 8 billion people. That's what the world should look like, right? And so what does that mean on the surface of what I just said? So first, you could, as a first principle, you should argue what I just said. Try to poke holes in what I just said and find ways. And people will say, well, what about energy? Or what about some things that are scarce? Well, let's look at energy as something as an example. So in Bitcoin terms, energy price is falling. And there's a free market now in energy that's using Bitcoin mining to chase abundant energy, to create more energy. So as a first principle to life, we need more energy, right? And we're on top of that work of energy. And if energy prices are falling in real terms in Bitcoin, then some of the other things that we need, let's look at mining or resources that people use as examples that don't fall in price. We'll look at a mine today versus a mine 100 years ago, and how much labor is in the mine today versus the output versus 100 years ago. And the labor component is way less.
Yeah.
And if you go to a mine today, most of the vehicles are automated. Most of the AI systems are moving into that. Pretty soon it'll be robotics into that. So measured in energy and output or abundance or growth, then those prices are falling as well. But we don't recognize those prices are falling, right? So we don't, because in real terms, they are falling and they will continue to fall forever. That's actually what Bitcoin is measuring. Yeah, I've always been an entrepreneur, and very rarely can an entrepreneur raise debt. Very rarely when they have an idea. Why? Because it's too much risk for debt. The only money that an entrepreneur can raise for a new idea in something is somebody who believes in them, in equity, that their thing that they're going to build is going to create so much value for society that they're going to return more equity. So it doesn't require debt. It doesn't require, it's a false, again, it's a belief system that it requires that. And you know what I'm saying is true. Because you see a lot of entrepreneurs get funding. In fact, Ego Death, what we do is we make investments. So primarily the Ego Death is in the risk-free rate of the world is 45% IRR. That's a Bitcoin return against the currency. And so we're making investments in entrepreneurs to beat the risk-free rate of the world by creating value for the world. Right. And then those entrepreneurs are building their balance sheets in Bitcoin because of the value that they're adding. So the process that I'm describing, and we have a lot of money to do that. And why do we have a lot of money to do that? Because other investors believe in our ability to do that, to be able to choose entrepreneurs and help those entrepreneurs succeed. So it doesn't require debt.
Right.
In 2025, as the Bitcoin price surges to heights no one thought possible, the late adopters will face a reckoning. They'll look back in disbelief at the opportunity they dismissed, as Bitcoin exposes the cracks in the foundation of the global economy. They'll realize they bought into a system that rewarded stagnation and punished innovation, while Bitcoin offered an escape route all along. Unlike inflationary systems that distort value and centralize power, Bitcoin stands as a decentralized, secure protocol that measures real productivity. Booth emphasizes that the natural state of free markets is falling prices, driven by technological abundance. Bitcoin imposes a global free market, repricing value outside the manipulated monetary system. As humanity discovers its potential, Bitcoin reshapes economies, empowering fairness, abundance, and lasting change. Let's watch more clips from the interview.
So the natural state of the free market is deflation. As we create technology and better tools or digital goods that replace physical goods, those goods, because the prices fall to the marginal cost of production faster because it's based on a line of code, fall faster. Even fall faster. So as physical goods would fall less fast because there's still more human labor in those goods, and I'm trying to do this in an order to be able, because it's a complex. But prices fall to the marginal cost of production. As we create more and more technology in abundance, then that means prices should fall faster and faster. Meaning there is no inflation rate. There's no zero inflation rate. The natural state of the market is not zero. It's not 2%. It's not 5%. It is negative. It's the productivity rate of the world expanding. And so that today would probably be, now you cannot measure what I'm saying from the system you're measuring from. And the chart that you just described, I hate that chart, because every single thing in that chart is also manipulated by the money supply. So TVs, computers would have fallen way faster. iPhones would have fallen way faster. The entire chart is being manipulated by money supply, and everything in it is being measured. So you have to be outside of the system to see the real truth of how fast prices are falling. That's why Bitcoin is outside of the system. It's bounded by energy. It's outside of the system. So you can see the true rate of what I'm talking about. We have never lived in a global free market. You have no reference frame for what I'm talking about. No one on the planet has a reference frame for what I'm talking about. The way your brain will compare things is compare from what has existed before and then try to make an association with what the new thing is. And what's happening on Bitcoin is it's imposing a new set of rules, and it's ruining people's reference frame. It's imposing what I just described. You actually, if you're living in Bitcoin, you're living in the start of the first global free market the world has ever seen. Within time, 8 billion people in service of 8 billion people. And the only thing that could change that, what I just said, is if somehow Bitcoin became centralized or insecure. But otherwise, it doesn't care that I'm saying this. It is imposing a free market force on the world. And everybody else is negotiating against their belief system. Before we get into inflation and kind of the other side of the coin, let's say if you're not in Bitcoin and you believe in your piece of paper, then it is true all prices rise for you. And your life is likely getting worse and worse. And it is also true that the government is centralizing because it has to centralize, and it has to misallocate more and more capital, and it has to do all of these things because it's a structural problem that can't be fixed from that system. It is likely true that from within that system, if you're measuring from that system, let's say you're one of 7 billion people on the planet without assets, you're getting stolen from at such a rate that you think the solve is from within that system. And you're voting for people to, and why the world feels like it's dividing is that reason. Let's say you're one of the 100 people or 1,000 people with most of the assets. Then you're wondering why why you can't build walls high enough to keep those bad people out while you're stealing from those other people. Because the entire system is based on theft, or inflation, which is based on theft. But those two viewpoints from inside the system, depending where you would look from, would be true for you. They wouldn't be true for the new system. So now let's say if you're most of Bitcoiners are measuring Bitcoin from the US dollar. What would they be saying? They would be seeing, and it would be true for them, that I have an asset that is rising at 45% per year with volatility, and my other assets are 8%, 5%, 2%, and there's still inflation I still live in an inflationary world, but my Bitcoin is rising faster than inflation. Mm-hmm. And that would be true for them. Mm-hmm. And so what they would be doing is they would still be contributing to a centralized world that was extractive, and making that stronger from them, and wondering why the world's still dividing. Well, and then if you were in Bitcoin only, if you really understood Bitcoin, that prices fall forever in it, then prices would fall forever in it. And that would also be true. And so when I say these different viewpoints, depending on the observer of the system, would all be true for each observer, and they would think they were right. Mm-hmm. And so it's and that's why we've talked about this lots. People find Bitcoin in their own time and when they're willing to, because it's just an open protocol. It doesn't care what you and I are saying about it right now. It's decentralized, secure, bounded by energy, and it is repricing the world. And if it stays decentralized and secure, then nothing that I'm saying right now will change that. It will reprice every single thing. It's outside the system repricing it.
Bitcoin's recent market movements highlight its growing influence in the global financial system. After dipping below $100,000, Bitcoin quickly regained its footing, keeping investors guessing about its next steps. Analysts have noted a significant decline in take-or-sell volume on Binance, a key metric signaling reduced selling pressure and potential renewed buying momentum. At the same time, increased stablecoin flows into exchanges, and a subdued Coinbase premium suggest a complex environment where US-led buying has yet to gain traction. These dynamics, coupled with broader concerns about asset bubbles and risk corrections, hint at a potential consolidation phase before Bitcoin's next rally. Jeff Booth's perspective on Bitcoin aligns seamlessly with these developments. Booth emphasizes that the natural state of free markets is deflation, driven by technological innovation and productivity growth. Bitcoin, by design, operates outside the inflationary fiat system, serving as a deflationary asset that reflects true market value. Unlike fiat currencies manipulated by central banks, Bitcoin's decentralized nature and limited supply make it a powerful hedge against systemic inefficiencies. Booth argues that Bitcoin offers a glimpse into the first global free market, where technology drives prices downward, empowering individuals instead of central authorities. As Bitcoin consolidates and prepares for its next move, its alignment with deflationary principles strengthens its case as a cornerstone of the future financial landscape. The interplay between technological innovation, market dynamics, and Bitcoin's intrinsic properties underscores its transformative potential in an increasingly digital and interconnected world. Bitcoin isn't just a currency, it's a paradigm shift. As we wrap up, what are the risks and opportunities associated with Bitcoin's transition from an asset to a cornerstone of global finance? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.